Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sara, Index Research Strategist at Nasdaq Global Indexes, for an update on the Nasdaq CTA Global Climate Technology Index. Sara, it's great to see you as always. Welcome back to Trade Talks, and give us a high-level overview of the methodology behind this index.
Hey, Jill. So today we're really excited to talk about one of our newer indexes, the Nasdaq CTA Global Climate Technology Index. This is an index that we partnered with CTA, the Consumer Technology Association, on. We bring the index construction expertise while they bring the technology taxonomy and research. And we partnered with them for over 13 years now, and other various thematic tech indexes. But really, we're looking at these particular global climate technology stocks that CTA has defined as again, a climate technology company, specifically enablers, engagers, and enhancers. And those are really looking at power sources and storage, climate infrastructure, and enhancers would be defined as ag tech, food tech, and things of that nature. So there's an ESG screen on this index. So, we do check for noncompliance with the United Nations Global Compact. We make sure that there's no high controversy ratings using Sustainalytics data. And again, we do not allow companies that have an involvement of certain degrees in controversial weapons, oil and coal, and things like that. So we're looking at, we just have, again, the definition from CTA, and then we have a basic liquidity screen. Then we look at that ESG screen, and then we're looking at revenue, and we're defining stocks as being in a tier 2 or tier 1 level. And so all of the stocks that meet that criteria are held in the index. It's rebalanced semi-annually in June and December, and it's also reconstituted twice a year.
What sectors does the index have exposure to, and what are some of the top names?
So again, being a global climate technology index, I think this is a really unique product or index, especially when compared to what's out there right now. So it's overweight industrials and technology, 44% exposure to industrials, about 18% exposure to technology. We have other exposures as energy, consumer staples, discretionary, things of that nature. But when we look at the top 10, it accounts for about 38% of the total weight. And of those names, there's some, there's Tesla in there, Emerson Electric. But one name that you see on there is Deere, so John Deere, and that's an industrial name. And this is kind of where, again, CTA brings that expertise and is able to drill down and really find those stocks that are involved in maybe areas that we wouldn't necessarily associate with global technology or global climate technology. So John Deere is a leader in ag tech. They have a See and Spray Ultimate tractor. It uses computer vision and machine learning to do targeted spraying on weeds. So it detects weeds among corn and cotton and soybeans, and it uses cameras to target within 10 inches. So it does, exact precision spraying, which not only saves farmers money, but it also keeps those herbicides from getting into the ground. So this, again, unique strategy here, and we're really looking at, again, not necessarily overweight of technology, but an overweight of industrials.
And finally, let's talk about performance relative to its benchmarks.
So we can look at the Global Climate Technology Index versus some peers. And again, this is an index. We're looking here at total returns. We have a backcast data going back to June of 2016. This index did go live on January 16th of this year, so it is relatively new. But looking at that backcast, we can see that looking at cumulative returns, it is outperforming the likes of the iShares Global Clean, the iShares Global Clean Energy ETF. As well as the Invesco Wilder Hill Clean Energy ETF. We see that, there was that boom, that green line there is one of the other indexes, but we can see that those strategies are overweight energy and utilities, whereas the climate tech is overweight industrials and does have some of that discretionary exposure, which does set it apart. So there is no real apples to apples comparison here. And then when we look on a year-to-date basis, we're really seeing the technology and industrials overweight here, and that lower weight, again, in utilities and energy really contribute to performance. Year to date, we're up 7%, whereas the other 3 benchmarks or peer products that we're looking at are all in the red for the year. So again, really driven by that technology, but again, adding this index to our suite of ESG-friendly indexes. And again, this is the Nasdaq CTA Global Climate Technology Index.
All right, Sara, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.